Good afternoon, ladies and gentlemen. A very warm welcome to you in these trying, troubling, and volatile times when the entire world is at war with each other, and the biggest losers are retail investors. People who have put in hard earned money into markets are seeing their valuations and actual wealth erode very fast. How to navigate this market, what to do, how to plan your future investments and what to do with existing ones are questions that we are going to put to Mr. Prateek Agrawal, MD and Chief Executive Officer at one of the most successful asset management companies, Motilal Oswal AMC. Mr. Agrawal has been with Motilal Oswal AMC for the last 3 years, but has spent considerable time at SBI Mutual Fund, at ASK Investment Managers, about 10-12 years each, and of course at BOI Mutual Fund and BNP Paribas Securities. A very warm welcome to you, Prateek ji. And we talk to each other at a time when there is so much of pain in Indian equities. You helm a very successful AMC, which has been amongst those rare people whose small cap fund is still in the green. So, what is the success behind that? And how do you see sentiment at Dalal Street at this point of time?
Several of our funds did well in the last fiscal. We topped the chart in many categories. Small was one for sure. Large was also there. Mid, Flexi, LMC, many categories we topped the charts. Each one of these spaces we are trying to address this space differently versus others. The common thing is that we are not close to the index kind of positioning. We go where growth is. We are a growth focused house. We go where growth is, and the managers build portfolios seeking out spaces in the market which can lend growth for several years. Now, the strategy worked very well last year. And we believe that for any long period investor who thinks that earnings growth ultimately is what drives market, we think we are very well suited to any long term investor's portfolio.
Okay, let me just give you a brief profile, ladies and gentlemen, of what Mr. Prateek Agarwal's AMC has done over the last 1 year. Now, look at the rankings. Motilal Oswal Large Cap Fund is ranked first amongst 143 funds. In the last 1 year, the fund has appreciated 19.6%. This is despite all the carnage that you see that is happening in the market in the last 6 to 7 months, including today. Look at the Motilal Oswal Small Cap Fund. It's first among 44 funds, returning 12.14% in last 1 year despite the massive sell-off. Ditto for the mid-cap fund. It's ranked 30th. It's ranked third amongst 50 funds with a return of 9.7%. Similarly, the flexi-cap fund is ranked fourth amongst 90. It's given a 10% return in the last 1 year. And of course, as I have said, the small cap fund is ranked first amongst 44. Now, Prateek ji, given this volatility that we are seeing in the markets, how are you navigating this very sharp downturn? What are you doing in large caps? How are you navigating smalls and mids?
When there is volatility, there are a few checks that we have to do. We are growth investors. We marry quality with growth. So if you see, bulk of what we have in the house would be cash on book businesses. The quality part is very nicely taken care of. High ROCEs, better than index ROCEs, and cash on book combo is what we have in terms of our investing companies. One. Second, the source of volatility is external. Something that happened in the US, and it is having repercussions across the globe. Now we think that this is the time when the fundamentals of domestic economy and that of the market are disjointed. So fundamental wise, if you measure fundamental with GDP, I don't think anything that has happened impacts GDP negatively. Your exports are not so large. Let's say exports to the US maybe 80 odd billion dollars. Value addition there maybe 10% of that, so $8 to $10 billion. And versus that, because of whatever we are having, oil is down 12-13 dollars. So on a run rate basis, the country saves 15 billion. So, you give something on one hand, you get something on the other. Net result is that for the GDP outlook of the country, it is not a negative. Forget even 0.123, it is actually on maths positive number. Now there are spaces. So spaces which have oil as an input, energy as an input, energy has gotten cheaper. So, spaces like cement, airlines, refining, marketing, anything where energy is an input has benefited. Spaces which are India specific, like consumer staples, discretionary, real estate, automobiles, etc. Ceteris paribus are looking forward to rate cuts, which should be positive. Now, when we are on rates, very clearly, even NBFCs benefit. Now, if we look at other fast-growing spaces, so for example, electronic manufacturing, well, for us, it is import substitution. Very little of what we assemble in the listed space goes to the US. An Apple ecosystem lies almost entirely out of the listed space. If we So all the EMS companies in the listed space may have less than 5% exposure to the US market, for example, is our sense. Now, if we look at a space like renewable, it is completely domestic. Even if we are looking at solar guys, while one guy is linked to the US, they have plants there. So space by space, if we see, we are a very, very domestically focused economy with very little damage to most companies, most businesses in the country. By substitution, some of them may gain. So let's say garmenting, other countries may have gotten a higher duties versus us, so we should tend to benefit a bit. Similarly, electronic manufacturing, Cambodia, Vietnam, Taiwan get a higher duty versus us, so we should tend to benefit a bit on substitution. But otherwise, we should be looked as being fine. Now, here once again, we need to understand there is a second order of impact. Now, the second order is what is causing a bigger impact in the market. People think there will be a huge demand slowdown in the US because prices are moving up, and that will have a recessionary impact around the globe. Yes, but I think the fears are way blown out of proportion. So, for example, tax of 26% would be on a 200 rupee shirt that may be going out of an India Bangladesh. Okay, तो 200 रुपए के ऊपर आपके 50 रुपए बढ़े, which is like $0.75, and the same shirt may be retailing in the US at a very different price point. So if it is selling at $1,000, it goes up by 1,000 rupees. It goes up by 50 rupees, 60 rupees. It is not that it goes up by 260 rupees as is being made out, and something similar for a cell phone like an iPhone. It is on Indian cost, so there is no duty which is changed from getting stuff from China to India or Taiwan to India or somebody else to India. So on an Indian product, if what we sell to the US is worth $10,000, duty of 26% is on that. So 2,500, $2,600. You may sell it in the US for $50,000, but the selling price, even after looking at the same margins across the channel, will be 53,000. The street fears it will be 26% up. No, that's not the case. So there is a huge fear in the market that needs to be addressed. Yes, there are verticals like shrimp farming, etc., which have gotten negatively impacted. That let's wait for some more time and see if things settle down. Now, even for other spaces like chemicals, there are many exceptions. So pharma hasn't been impacted as yet. In any case, we are the cheapest source of generic pharma globally. So if there is a tax, it is a tax on US clients. They will. So if you're putting an import duty on everybody, in the short term, it will work like a GST does on Indian consumer. It's a tax on consumer. It's not a tax on outside guy. So I think fear factor is very
Right.
large,
Mr.
which is
Agrawal,
causing the markets to go down.
fair point. Against the backdrop of these tariffs that have been imposed, against the backdrop of a global war that we are seeing unfolding, what are the three top domestic focused sectors that you are looking to shop in?
So I made a laundry list of domestic focus sectors, which actually tend to benefit on the margin, and that includes staples. So if you see the market today, paint companies are hardly down. FMCG actually stands to gain. Cement stands to gain. Uh, uh, for for us, we think we are growth investors. A lot of these spaces we don't have. For us, we think NBFCs with lower interest rates will benefit. We think there is no damage to, let's say, renewables, where outlook is very, very India centric. For EMS companies, we think there is a chance for gaining some market share. I think uh, if we look at our portfolios, 8-10% maybe internationally linked. The rest of it is domestically linked. So we think on fundamentals we are fine. But yes, fear is causing investors to be less there in the market, and small selling may be causing a large price declines.
Okay. Some of the top holdings that you have across your AMC are in mid cap IT companies. Software has been taken for a massive, massive sell off in the last 2 or 3 weeks. How do you look at the environment in the mid cap software space as of now?
Yeah. So we were in mid and small software companies because larger caps were simply not delivering any growth. Mid and small were delivering growth in excess of the index, and that is why our focus has been to that space. So software hasn't been impacted in the initial this thing. Uh, we don't think there will be any duty levied on software. It's a second order impact. Basically, the thought is that if companies in the US face a stress, will they invest into software, and won't it face a slowdown kind of a thought? We think these thoughts are there for the time being till clarity emerges. For this period, Indian software companies may have a very strong order book. So they are that way nicely positioned to paper over this period. And beyond that, if you believe either the same set of guys come back winners, in which case there is no change in the outlook. But if a different set of guys turn out to be winners, then investments increase hell of a lot. So investments across the board, and that will benefit software also. So there is a thought of the day, there is a promise of the future. So just go ahead half a month, 1 month. As you see finalization of tariffs, hopefully at a much lower level than what we know today. Winners emerge. If the winners are new versus what they are now, whole industrial ecosystem will have to be built there, and that causes hell of a lot of investment into industry, and by extension, software into new spaces, into new geographies, and so on. So we think we are less there versus the index, but yes, you are right. We are there in mid cap IT. We think In such situations, mid-cap IT with their order books to paper over the uncertainty of a few months is in a much better position. One should not be disappointed with the numbers. Stock prices are, of course,
Okay.
reflecting
Mr.
otherwise.
Agrawal, okay. Mr. Agarwal, when you look at today's market action and the fact that PSU stocks of all measures had corrected substantially already in the last 1 year, do you see some value buying from your side or from the institutional side into very strong local dividend plays, companies in the power sector, maybe coal sector, which are absolutely unconnected to this tariff war and have corrected substantially? How do you look at PSUs, especially large Navratnas?
No, so PSUs are very nicely positioned. They are all India-centric businesses. Very little damage there. Lenders will probably do very well. Power generators will do very well. Defense will do very well. Defense, I think, is a huge winner of whatever is happening, and all the large companies in defense space are PSUs. Metal mining may have a small issue because if the world is slowing down because of all of this, then expect metal mining stocks and the end product prices to be a tad weaker. So that may be an issue, but otherwise, I think PSU pack is very nicely positioned. Now, power, of course, these are fixed return businesses. So for people who are seeking absolute safety, these are the spaces to be in. In power, we want to be be focused on the higher growth spaces such as renewables. So that is our bet. We are growth investors, but the space identification is
Okay.
absolutely correct from your side.
Okay. Prateek ji, when you look at pain in the market, possibly impending pain, what are the sectors that you are keeping away from? I see very little of pharma amongst your top picks across the equity spectrum in Motilal Oswal AMC.
Yeah. Pharma, frankly, we were invested into hospitals that did very well for us, and now we are less invested in hospitals. So healthcare is how we used to see it. Now we are exposed to manufacturing name which doesn't do generic, but it is more into doing devices for these weight loss drugs, which we think are a very fast growing part of the market. So that has been our focus. We kind of missed the the pharma performance because for one part we were with hospitals when this CDMO thing happened. We frankly remained skeptical. We were out, broadly speaking. We missed that. But yeah, now as of now we are with the device makers.
Okay. Mr. Agarwal, when you look at the top 20 holdings of Motilal Oswal AMC, on the 15th spot is the first large cap, which is a telecom major. And private sector banks are actually below 20th rank. What what is your thought process in terms of valuation? What is the reason behind this? How should I say? Is it a dislike that you have for large cap companies?
I think what you have done is to aggregate our holdings and then you have sorted it in terms of large cap, mid cap. The number comes in because our mid cap fund, incidentally, is the largest fund of the house at 25 plus thousand crores. The next is just about
Yes.
11,000 crores. The one after is 9 and so on. So that distorts the picture. But that said, if you take any theme where growth will be there for longer. So new tech, there is one company which has become large cap, everything else is mid and small. Hospitals, one hospital is large, everything else is mid and small. Defense, you may have two companies large, everything else is mid and small, and so on. Luxury consumption, one company is large, everything else is mid and small. If you see that way, then you start to understand why our portfolios are more in the mid and small. You should see whether the names that we have are among the top one, top two names of that space. If the space is young, we believe we have got the leader position in the new spaces. Is one thought. Second is that we think we have been communicating this, that we think this is time for alpha. Alpha is generated in newer spaces with strong growth in earnings sustaining for several years emerge, just like software did in the early to late 1990s. Uh, and maybe private sector banks did it from 2002 till very recently, and so on. We believe newer spaces like capital market infrastructure, companies, luxury consumption, EMS, renewables, and you get the drift, is where businesses are young, growth can sustain at higher levels for longer. Most of this is domestic focused. Most of this has companies with cash on book. So these are spaces where you find higher exposure in our house. Now, you spoke of private sector banks. We have nothing against private sector banks, just that we believe that as we go forward and interest rates get cut, the names could be under pressure and it could take some taking by the managements to prevent that. And two, many of the large private sector banks who earlier were growing at 30% plus compounded earnings are now doing at a fraction of that, while people who say that they are cheap say it for when they were doing 30% growth and not realizing that the growth trajectory is very different.
Fair point. I think that's a wonderful defense. And given the fact that the top largest of your four funds are in the upper quartile, if not at the first or the second place, is a wonderful defense by the market as well. Mr. Agrawal, rupee was a pain point, and that led to a lot of FI selling as well. Of course, there were other reasons as well. Do you think the worst is behind as far as rupee is concerned?
So this is where it is a moving target. Happily, rupee has been strengthening, uh, and strengthening rupee is great for offshore investors to come into the country. But the and our reserves have been increasing, so that helps. But to some extent, rupee is also competitive. If our competing nations see a devaluation, I think some amount of impact would be seen on our currency as well. So it is very, very difficult to say that is the worst behind, and should we believe rupee stay stable. Had this eventuality not happened, we would have said so. But now with this, I think it is still there are a lot of moving parts. It will take quite a time, quite a while for that judgment to emerge with any high degree of conviction.
Okay. And one of the best performers has been gold and silver. Even your gold and silver ETFs have given phenomenal returns. Is the best part of gold's uptick behind us?
If the hello
Best part of gold's rally behind us?
gold rally.
Yeah, Mr. Agarwal, I was saying that is the best part of. Yes. Is it behind us now? The best part.
No, so one should have some bit of gold is what we think, but we are not experts on that subject. This is an asset class that does well on when uncertainty is high. Such is the case now, so one should expect that, but we are not experts on that field.
Okay, fine. Uh, the most pertinent question that mutual fund managers, CIOs such as yours, and the investors at large face is this small cap, mid cap SIP conundrum. What has been your experience in MOSL AMC? How has the SIP inflow being infected over the last 3-4 months, particularly in Jan and Feb?
So we have seen very strong SIP inflows. We were 300 odd crores in the beginning of the year. We are over 1200 crores as we speak. We saw an increase till Feb. In March, we have seen a 14 crore drop in realized numbers.
Okay. Okay, fine. And what is your advice to, of course, you are very, very happy because mid cap and small cap fund from Motilal Oswal AMC has done phenomenally well. It is still in the green over a 1 year period. What is your advice to people who are investing in this category? Maybe they are a bit on the edge. What would you suggest to them? Ride out this downturn?
So it is up to the investors. We think lot of the reason for the sharp correction that we see is more technical in nature rather than fundamentals. That said, if technical issues last for longer, it can start impacting fundamentals as well. So that is the caveat I will take. But otherwise, if you are getting a large price correction for technical factors because of fear, just think of it. Today, fear is very high, and stock markets are displaying that. As over time, fear reduces, outcomes should be positive. So now the thing is, fears can stay high for long. So the idea is to take advantage of the crack that one has seen by putting in small amounts of money rather than betting the house all at once at the current levels. So, but try and take advantage of what's been happening. At the same time, if somebody needs money in the short period of time, he should think otherwise, try and take that out because this uncertainty can last for some time. There can be orders to it, but for a long-term investor, I think these are great levels to start nibbling in.
Okay, fine. Do you expect Mr. Trump to actually make America great again, given the problems that he faces? And how do you think this tariff war will end, if at all?
So I don't know. I won't comment on politics at all. But what I do understand is there are two great guys fighting. When जिसको कहते हैं दो बिल्लियों के झगड़े में the bone may be taken by somebody else. I get excited to think of possibilities which may emerge for a country like India when two big guys are fighting each other. Is all that I want to be focused on. It's very clear that those two guys are not getting along, which opens up leeways for many others. The good thing is the top two markets in the world uh, are not wanting to do business with each other. The third largest bloc also is getting impacted a bit. We may be the fourth largest. We expect everybody to woo us. So if we play our cards well, uh, you know, uh, I think this can be a godsend opportunity for our policymakers to help the country get to the next level. But all of that happens over a period of time. Time will tell. In the interim, we have to survive.
Right. Mr. Agrawal, this is one of the most optimistic things that I have heard in probably the worst day in our lives as far as equity investing is concerned. Thank you so much for such wonderful exposition on how mid caps and small caps should be expected, and have a nice year. Let's hope that your funds perform the best as they have.
Thank you.
Thank you. That, ladies and gentlemen, was Mr. Prateek Agrawal. He's the top man at Motilal Oswal Asset Management Company, the MD and CEO. and his hopes are centered around growth stocks. As I have said earlier, many of his funds are ranked at first, second, third place over the last 1 year, and the AMC has done exceptionally well when it comes to navigating the volatility that we have seen in prices, the market correction that we have seen over the last 6 months, and the way the markets are likely to shape up over the next 6 months. I hope you enjoyed this conversation as much as I did. Continue watching Business Today Television. There's a lot that's happening on the other side of this break. Have a nice day.
All eyes are on Prime Minister